Good day, my name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my view in the macro area for the coming week. The past week has been overall positive for the markets, mainly due to Fed Chair Powell statements made at Jackson Hole Symposium, where he basically announced that the Fed is going to shift or slightly change its monetary policy on a mid-term horizon, now targeting an average inflation for a period rather than a particular level for inflation. That is very significant, particularly given the recent reports that suggested that in July we have seen some increase in inflation pressure throughout many parts of the world, including leading economies starting from the US. And these reports basically led to some uneasiness on the markets because people started to speculate whether the period of ultra weak, ultra soft monetary policy from global central banks is coming to an end. So basically, Powell's statement means that at least on the midterm horizon, like in the next half a year to a year, the Fed is not going to react immediately to any increase in inflationary pressure, rather preferring to wait to see how the average inflation for a longer period works out. So this statement led to some increase in activity on global markets. We have seen investors taking more risk, and that supported the Russian market as well to a certain extent. But also in the second half of last week, we have seen basically the fall in the volumes of Russian ruble bonds, state bonds sold by foreigners. Over the past week or so, we have seen significant spike in these volumes of sales of OFZ, which basically led to significant increase in pressure on the ruble because the foreigners were then converting the rubles received from sales of the bonds into hard currency. But this period lasted approximately 4 to 5 days, and on Thursday last week we have seen significant decrease in the volume of sales, which immediately led to the start of appreciation in the ruble. Ruble regained about 2 rubles to the dollar over the period of 2 days, Thursday, Friday last week, closing at around 74 rubles to the dollar versus close to 76 rubles to the dollar that we saw in the first half of past week. Looking into the coming week, basically we expect this period of gradual strengthening of the ruble to continue. We expect ruble to trade this week overall in the band of 73 to 74 rubles to the dollar. And in a month's time, at the end of August, we actually expect ruble to appreciate further to around 71 to 72 rubles to the dollar. We did not change our year-end forecast for the ruble. We expect the currency to trade approximately in the corridor of 69.5 to 70.5 rubles to the dollar, basically based on the same level of oil prices that we are seeing now, around $45 to the barrel. Our year-end forecast basically does not take into consideration possible geopolitical risk or possible increase in geopolitical risks. First of all, because it's very hard to forecast accurately what geopolitics can bring to us on a 3 to 4 months horizon. Our base case scenario is that geopolitical situation around Russia would remain stable, will not create more risks to investors, and would not create more pressures on the ruble. It might not be so, but it's, as I said, it's very hard to forecast. So based on this forecast of neutral geopolitical risk, we expect ruble to strengthen further to around 70 rubles to the dollar by year-end. The coming week would be significant in a sense, because basically there will be the whole array of early indicators published on global economies, including Russian economy. We're looking at PMI for business confidence and PMI in the services area. This would be the first early indicators for August. We actually expect to see some softening of consumer demand in August compared to July. July was quite good. We have seen significant increase in consumer demand in Russia compared to June, but that was primarily driven by the post-quarantine effect. And in August, we actually expect this, this post-quarantine effect to become softer, and we do not would not be surprised to see some softening in year-on-year dynamic in the consumer area. But overall, we basically expect the economy to remain fairly stable, stabilizing at some levels at around -3, -4% year-on-year. So basically, that's all on my side. Thank you.